It's another week of Wealth Webinar. Actually, it's another week of What the F Happened. Wealth Webinars at 1 o'clock. But you know what? There's so much to talk about today. I don't even know where to begin. I'm joined by my partner in crime, Mr. Snaggy, and all of you wonderful folks. This is going to be an interesting one. Inflation this morning. The numbers came out. The futures were up. Cash was watching them for us. He plays the evening shift. He plays the futures and everything else while we're sleeping. Futures were up in anticipation of inflation showing a decrease, but it didn't. Inflation's 9.1%. Look at the news articles, 9.1%, even after the Fed is taking massive action and raising rates at unprecedented levels and unwinding the balance sheet. But that's just the beginning of where the story starts. I mean, top headline news is Elon Musk. Elon Musk backs out of the Twitter deal because of false information, because Twitter isn't what Twitter seems. The biggest problem in America isn't what people don't know. The biggest problem is what people think they know that just ain't so. Guess that's Twitter, because we thought we knew what we didn't know. And Twitter is a game of lies. And Elon's calling them out. So they sued him. We'll see how that happens. But that's only the beginning. How about in this country, gas prices? Are those going down? No, they're going up. But let's blame everything on a war that we really have nothing to do with over there, the Russia-Ukraine war, which it seems to me like they're trying to thrust us into this war. Blame everything, every news media, everything is Russia's fault. Inflation? I just heard President Biden go public saying the reason we have inflation is because of Russia. Folks, please tell me you don't, even for the a second, believe that, because that would just show how gullible American public is, and that would be sad. Folks, the war has nothing to do with inflation. Maybe supply and demand, but nothing to do with inflation. Inflation is because the Fed printed $5.1 trillion and just expected it to be okay. Oh, we misjudged that. We overshot that. It's transitory. Holy crap, where do we even stop? They got it wrong, and they've admitted it. Well, maybe we got it wrong, and now we're going to take massive action. You know what that means? Do you know what massive action means, folks? Inflation's 9.1. That means the Fed's going to take even more action, which means say goodbye to the stock market. Folks, there's a lot more. Sri Lanka, Biden landing in Israel, begging for them to produce more oil because we just got a little bit of a shortage, but yet we sell our oil to China. That's an interesting one, but I know more about that. Dow futures right now are down over 300 points. We're going to talk about this. We're going to talk about what you can do, and we're going to have a ton of fun. We'll be right back. Welcome back to What the F Happened, and this is a week for the record books, because what the F happened should be the only thing flashing in your mind, because there's a whole lot happening. Mr. Snaggy's back from his vacation. Welcome back, man.
Thank you. Good morning. How's it going? Sure. Yeah, I was up in North Carolina, Western North Carolina in the mountains, and then drove through the Smokies over into Tennessee and the Pigeon Forge area. And I'll tell you, man, Chris, it was an eye-opening trip, from the fact that the highways are packed. The trucks that just line the highways are unbelievable. The amount of people that were at these big amusement parks and different attractions and things going on. It was like, if you looked at that, you would think that we're in the most prosperous time ever right now. And it makes me worry, because I know that's not what's going on right now with the economy, with the markets, with people's, incomes and livelihoods, with inflation running crazy and things like that. And it makes me worry, because it makes me feel like we're seeing kind of what was going on before 2008, where people were just out spending and not thinking about the future and everything. So we'll see, but everything was packed. People are not holding back right now from doing stuff, from what my experience was this summer.
Yeah, well, summer's always a time, even if you go back to 1929. I've studied that time frame, 1926 to 1933. I've studied it like a nerd. I sometimes dream about it. That's how much I know about it. And in the summer of 1929, the same thing was happening, Stephen. You know, they were on the brink of the Great Depression. That was the start of it. And the market was already showing signs of weaknesses. Everything was showing cracks and weaknesses, just like today. Things might have been a bit different in 1929 than they are in 2022. But you know what? From the sentiment of how investors looked at things, they were optimistic. Stock pickers were saying this is going to come back and go to the moon. Big bankers were like the Fed, because back then you really didn't have the government and the Fed influence. Even though they were there, they weren't influential like they are today. They weren't playing God, which is what modern monetary theory does. They were actually kind of sitting back watching this, but the bankers had all the cash. They tried propping the markets up. How did it all work? How did it work out in 1929, the summer where they were all going to their lake houses and spending money and living life? You've seen it. The Great Gatsby and all these different things. You've seen the pictures. Folks, that's right now. I'm not trying to, scare you anymore. You should already be scared. If I'm trying to scare you, like you've been hiding. You're living in a false reality. Like, you should be scared right now, but you shouldn't just be scared and bury your head in the sand. You should literally be planning, getting ready. Like, people are asking, how much lower can the stock market go? Okay, well, let's just go to, you can literally trend this one out very easily. The unique thing about the stock market this time is how fast it went up due to the pandemic. It came down about 34% and it spiked back up to unprecedented levels, a hockey stick like we've seen before, but very few times. And because it went up so fast, it's coming down just as fast. I mean, look at the markets, folks. You see your statements lately? Have you looked at yours, or are you just ignoring them like a lot of people do? A lot of people are like, I'm not going to look at it. I'm not going to look at it. Really? That's how important your money and your future is? You should start putting more focus on your family, because money is going to help your family through this next period. So if you're not getting ready, how much lower can it go? Folks, I hate to tell you this, and I know you don't want to hear this, but you could see another 40, maybe 50% fall from where we're at today. That's just by the numbers, folks. Just look at it yourself. It's not hard. Go back to 2008. Look at where we're at today and try to see the pattern of where we can fall to. If we're lucky, we'll stop at 2011 numbers, like 2011 levels. But I just don't see it happening, folks. I really don't. I think we're on our way back down to a more steady floor. And I don't know. I hate to say it. That floor existed in 2008 and 2009. That's about where we could go. And that's a scary thought. And a lot of people are asking questions, about what should I do? Well, we talk about this every week, folks. We talk about what you should do. Every single week we're going live. I mean, there's a chart. Look at how fast that went up. I mean, it's a bit small there, and I know TikTok and Instagram can't see this, but literally if I were to draw a picture, I'm just going to kind of draw something on the screen here, because I want you to get a good gauge of what this looks like. The markets, if you were to look at it, they kind of came down like this. And then they went up, and then they pretty much, it's off the charts. It's kind of like this. And now we're about right here, folks. Like, we all think this is bad. That's not literally, like, if you were looking at the chart, that's about where we're at right there. Folks, where can we go? Well, and this isn't a good, but we're going to go here or here. So we got from here to here on a good day, which is about a 40% fall. Or from here to here, which I didn't do the math, but it's about a 60% fall. So how much lower can we go? That's realistic, folks. Just look at the charts. You don't really even need to be a guru and I hate that word, but you don't even need to be smart with stocks. Just look at a chart. Go to the bottom where we're at in 2008, and then maybe look at 2011. That's a good floor. That is reality. And that is what we will do. You'll see some more tests. You'll see the market try to fight to climb back up, but it probably won't hold long. Especially right now. Stephen, this is an important thing to talk about. A lot of people ask questions. I know it really does hurt to look. Somebody just came in and said that on here. Yeah, so Barbara Merrill, she joins us every week. Thanks, Barbara, coming in from TikTok, said, so this time it's not going to go back up. Well, Barbara, it will go back up. But it won't go back up probably for another year, probably 2 years. When you look at a market cycle, okay, the fall, the deflationary period, which is technically what they would call it, is about a 2-year, sometimes a 3-year. If you look at the .com, sometimes a 3-year fall. And then it's about a 5 to 7 year climb back out. It's a 10-year cycle. That's just how it works. So that's what you can expect. 2, maybe 3 years more of a way worse period of time than what we're in right now. Because right now, we haven't even seen the glimpse of it. This is the first leg. We're not even finished with the first leg of the drop. And now, the thing that scared me the most, Stephen, and I'm not going to lie, when you sent me that text about inflation, when you sent me the text about inflation being 9.1, we're going to come there about Americans are putting more money into their 401ks this year. Why? Why? I just don't understand. But we'll hit that. But when inflation numbers came out at 9.1 after the Fed has taken drastic action, raising rates 3 times, the last one a 3/4 point raise, which is a lot. Okay, it's 75 basis points, folks. That was more than anticipated. That's why the market took a big fall. And inflation is still going up. And all they have to say about it is like, well, inflation's running hot. Yeah, you know what? So did the old cars before they figured out how to keep the engines cool. Like, what are you going to do about it? Well, we're going to blame Russia. Good idea. Great. That's the perfect thing you should do. Let's blame Russia for everything happening in this country. As a matter of fact, this government that we have in place, and I'm not taking sides. Who cares? Both sides are freaking broken. But this government is the blame game. How many of you know somebody you grew up with? Everything that happened in their life, all they did is blame something else. No, that was Jimmy. No, that was Susie. I didn't do that. That was this. And you're looking at him going, dude, I just watched you do it. You just blamed Susie? Like, I just saw you do it. That's this administration. Love it or hate it. Like, you can't deny that. I don't care what side you're on. You cannot deny that. They are the blame game kings and queens. But what does blaming do? Nothing. It doesn't fix anything. It doesn't fix a damn thing. It's a sick freaking world. And you see things cracking and falling apart everywhere. This is something I didn't expect. Not just inflation, okay? Not just the 9.1% inflation, but also the US dollar, so USD, and the euro are equal. I know that probably doesn't resonate with anyone, doesn't really mean anything to anybody, but that's a really important thing. I don't even know when that's happened. Stephen, do you know when that's happened last?
It's been about 20 years.
Does.
A little over 20 years.
Yeah, Thomas Morgan 64 on TikTok said, I think we're headed lower than 2008. Listen, I try to be an optimist, Thomas. I really do try to be an optimist. And it's really difficult for me to envision this could go lower than 2008. But if it does, man, say goodbye. You know, it's Arnold Schwarzenegger walking in saying, I'll be back. But there won't be any more sequels of Terminator because he ain't coming back. Not this time. Hope you guys all followed that. Some of you are probably way too young to understand that. All right, so look at 1992. U.S. had a vice president who couldn't spell potato. Well, we have a first lady that called, I believe, the Mexicans unique tacos. That was pretty interesting. I don't know what to make of that. You know, I like tacos, but like I think saying that is way out of line. I think that scriptwriter or whoever put that on the screen, because you know damn well she's reading off the screen, I think they probably got fired. Stephen, what do you got up on the screen there? Let's just hit that for a second. That's all right, Mike. No worries.
Let me open that back up there. So just talking about the euro and the US dollar here.
This is one that's really 20 years. There we go. Perfect. First time in 20 years, folks. 20 years. Some of you haven't even been around for 20 years. Or some of you were in diapers then. It's insane. It's not good. Cash. Get this. And just so everybody knows, I just want to call out, this is our shop cat. He lived here in an 8,000 square foot office facility, and he's just lazy. So he's part of every show because he's fun. But you know, all he does, he just bothers us, sits here and tries to eat the microphones. Don't you? What do you do that is productive? He doesn't know. He blamed everything else. Said he eats. All right. So what do we got?
Yeah. So one of the problems with the euro and the US being so close is it cheapens our exports. So everything that we're exporting, you know, what we get for that just becomes a little bit less because of all that issues. And you know, what we import obviously is better for us, but the exports are a lot of times what's important and why that does affect the overall economy. But it's something to pay attention to. I mean, there's a lot of global changes happening right now. I mean, you were talking about Sri Lanka. You know, the president of Sri Lanka fled the country overnight, which is pretty bizarre. So they got whole civil unrest going on over there. I mean, like we were talking about Biden over in the Middle East right now. I mean, he's visiting Israel and Saudi Arabia, and they've really gone hard against Saudi Arabia and the crown prince over there for the murder of the journalist a couple of years ago, and how they're the worst people on earth. And now he's over there begging them basically on one knee to pump more oil because he refuses to do anything here domestically to help with the situation. It's just the ongoing, let's just blame the Putin, the Putin price hike. Even the morning shows on Sunday, we're starting to be like, you guys should just trademark that term because you guys all just say it over and over and over again. At some point, the gig is up. Like, you got to come up with an idea. And they said, well, it's working. Gas is down 30 cents. Well, gas is also up, what, 300% in the last year. I mean, so it's happened way before Russia. So, when you look at approval ratings and things like that, I mean, I think Biden has the lowest approval ratings in the history of presidents right now. So obviously people are not resonating with what they're doing, but they're not making any changes. We're just continuing to support Ukraine. We're continuing to refuse to do anything at home to help the situation. We're now begging some of the worst people in the world to save us right now. It's insane what's going on.
Yeah. And Viper 4773, what's up, Viper? Thanks for being on here, man. Love your comments. He said, let's not bail out the banks again. And that's an important thing. If you remember 2008, during the Great Recession, the bailout package, $900 billion, it was an unprecedented amount, a far cry from 5.1 trillion, but $900 billion was used to save the entire financial system. It was the closest we've ever come. I was in Wall Street at that time. I'll tell you right now, that was the closest we've ever come to a complete collapse of the financial system. You saw big banks like Lehman and so many others, WAMU and all those, go bankrupt. And, like Viper's saying, let's not bail the banks out again. And I think he's right. The banks have made so many crappy decisions. I mean, this, let me just point this out. This is one of the most important things all of you can take away from this. These simple terms. There is never going to be another time in your life, mark my words, never in your lifetime is it ever going to be more important than right now to take back control of your money. I hope you hear me. I hope you're listening to what I'm saying, because I'm dead serious. If you are not starting the process of taking back control of your money, that is a tragic mistake. And you are seeing it happen, because if you don't control your money, guess who does? The banks. Guess who else does? If you're doing, that thing about money plowing into 401ks, that's Wall Street controlling your money. That's the government technically having their hands in your money. You're putting money away into a 401k today, your most valuable dollars. Mark my words, the dollar today, the money you earn is the most valuable it will ever be. This dollar you earn when you go to work, will never, ever be more valuable than it is today. So you're giving your best dollars up. You're putting them in a 401k. Why? 2 reasons. I'll tell you, there's only 2 well, maybe you can throw in retirement, but that's a false reality. 2 reasons. Number 1, they give me I get to put it away pre-tax. They give me a tax deduction. I don't have to pay tax on that money. Great. You're literally taking the bait. You're giving up control of your money to get a tax deduction or a pre-tax, contribution at the lowest tax rate we'll ever be at. Mark my words. Read The Power of Zero. It will tell you exactly where we're going to go with taxes. And then someday later, 5, 10, 15 years, when you retire at 59 and a half or beyond, it will probably be beyond. And we're going to hit Blaine's question about, seniors and how they're panicking today. But whenever that retirement date is for you, you're going to take that money back out of the 401k. But let me tell you what you're going to take out. Number 1, the dollars that you put in are going to be significantly weaker than they were when you put them in. So they're going to buy less. The purchasing power of those dollars will be diminished tremendously because of government action and the Fed printing more money. But that's not the big part of the problem, because the second problem is when you take that money out, you're going to take it out at whatever tax bracket you're in there. And unless your plan is to fail, you better be making more money then than you are now. So you're going to start taking that money out at a higher tax bracket than you're at today. And that's assuming just that you make more money. That doesn't assume that that the government is going to raise tax rates. We're at the lowest tax rate in history. Lowest. You don't think they're going to go higher? How are they going to pay back $5.1 trillion? How are they not going to default? Guess what? They're going to tax you. And they are right now. Oh, I'm not being taxed. They only tax those wealthy people, the bad guys, the rich guys. Those are the bad ones. They're taxing them. Bullshit. You gone to the grocery store lately? How many bags of groceries did you get for the same dollars that you spent last year? The answer is less. Less. Do you know why? because of a hidden tax called inflation. Don't think inflation is prices go up. Inflation is your dollars buy less. That's all it is. Prices are going up, but that's because your dollars buy less. That's all inflation is. It's a hidden tax. So that is one way they're going to get money back. And then they're going to tax you. So I just can't understand. Oh, and then the other reason people put money in 401ks is because of a match. Now, I understand that. And I will side with anybody that if you're going to put money in a 401k because your employer gives you a match, game on. Your match is probably 3%. If you're putting more than 3%, look at yourself in the mirror and say, what the F am I doing? All right, let's hit some other questions here. Because there's so much good stuff coming in. But what one do you want to hit Blaine's with seniors?
Yeah, I mean, so Blaine's in the financial industry saying seniors are panicking, especially the ones close to retirement. 401ks are losing inflation, hitting 9%, and most seniors only having Social Security for income. Folks are struggling. It's sad. And you're right, Blaine. And that's one of the things we talk a lot about is especially, because the old saying of, put the money in the stock market and over time it's going to go up. Well, what if you're out of time? What if you're at the point where you now need that money to live on, to exist? And it's now too late because, I just showed you the charts on the market over the last 12, 14 years. It's been nothing but Fed printing and pumping and printing and pumping and spending and printing and pumping and spending. And like, there's no tomorrow, right? It's just on and on and on and on. And so here we are today. I mean, it's got to come back at some point. I mean, I think we're going to kind of close this thing today here in a few minutes with a little discussion about crypto and, the big hedge fund Three Arrows that just went bankrupt about a month ago, and the owners of it, the two owners, are now disappeared. They've fled, and it's basically caused just turmoil in the crypto markets. But that's there's no Fed there to bail them out. There's nothing there to pump money in. So we're seeing what happens when the Fed doesn't have the ability, and with inflation going crazy and everything happening, the Fed's out of tricks. I mean, they can't continue to print and spend money because it's just driving inflation higher and higher. They can't keep rates low because it's driving inflation higher and higher. So they have to make these changes to get things under control. But when they make these changes, it's going to create the markets, like you're saying, Chris, to come back down to, who knows, $8,000-$10,000 levels like in 08. I mean, It's wild to see it happening in real time. And it's kind of sad. And we should also talk a little bit about China and what's going on over in China.
Oh, yeah.
The banks and the real estate market, because if we look at 08, I mean, a lot of what happened with us in the recession and the crashes in 08 followed what happened in China. So it's a good indicator to kind of watch what's going on there right now too.
Yeah, well, let's talk a little bit about what's happening in China. There's very rare violence. This is in China, folks, okay? There isn't a lot of violence because they just hang you or cut your head off or something like that. But there's rare violent protests in China, signals that the start of a banking crisis. So right here's the article. Bank customers are demanding their money back, staged China's largest protest in years. The violent episode is the tip of the iceberg of China looming banking crisis. We had a banking crisis in 2008. China sort of did, but did not. But it was a worldwide, crisis that happened. But we took the grunt of it in 2008. China's probably going to take the grunt of it here. And if you don't think, you're probably like, whew, thank God it's not going to be on our soil. Are you kidding me? Do you know how intertwined we are with China? Like, if China has a banking crisis, we're going to be next in line to feel the grunt of that. Mark my words, that will. Like, this is one, like, listen, I've gotten, I don't want to pat myself on the back, but, we have gotten a lot of things right. And you know why we've gotten a lot of things right? We're doing the research that a lot of people are not willing to do. Instead of looking to the future, what we're doing is we're looking into the past to see signs and similar patterns to what's going on. And then we're really paying attention to the people that really know what they're talking about. And we're looking at the long-term debt cycle, the short-term debt cycle, and the overall economy and where we're at. And guess what, folks? It's done. None of you in your lifetime have seen what's about to happen. And I'll tell you why. It's called the long-term debt cycle. It's 75 to 100-year cycle. The last one was, I think, 1933. So unless you were born in 1933, you've never witnessed what's about to happen. So if you've never seen it and there's nobody talking about it, how can you envision what it is? Well, you'd have to study that time frame. And I'm going to tell you, if you do, it's going to really depress you because it was awful. But in that awfulness came unbelievable opportunities. The Walt Disneys of the world, okay, that started Disneyland during the Great Depression. And a lot of people are asking, well, how did they do it when everything was crashing, when there was no money, when there was lines at the unemployment, people begging for food, nobody could get jobs, there was unemployment rates through the roof. Like, what were people doing to get ahead back then? The people that got ahead back then were the people that planned, the people that were in control of their money, and the people that learned something that every one of you should learn. Everything we teach about becoming your own bank, folks, it's not new. We didn't create this. I'd love to sit up and be like, Stephen and I created how to become your own bank using privatized banking. We did it, but we did not. It's been around for hundreds of years. So the people back then, do you know how Walt Disney World was started, or Walt Disneyland for that matter was started? He was broke. Banks wouldn't give him money. He couldn't get anyone to give him money. Do you know how he did it? Can anyone tell me how Walt Disney started Disneyland? And I'll give you a clue. It starts with life insurance, and then it finishes with whole life insurance. That's right. He took loans from his whole life because it was the only thing that didn't lose money during that period. So somebody asked, it was JD Gonzo 30, what should we do if we're not doing it? This is where we're at. People literally think there's no other option than a 401k, which is sad. That's how brainwashed we've become as a society with this traditional financial knowledge. Take back control of your money. Watch some of our videos. Join us this afternoon at 1 p.m. We'll go into it. We'll show you exactly what you can do. It's called Become Your Own Bank. Take control of your money. Do what the banks do. You want to become wealthy? It's easy. Take back control of your banking functions. That's it. Stop giving money every single month to the banks and start paying that money to yourself. And you're like, oh, that's impossible. It sounds too good to be true. Really? It's so easy. But the problem is it takes time. And everybody right now is seemingly for some reason in this rush. Everybody's in a giant rush to get rich. The only thing you should be in a rush to do right now is get your money out of the market. Take the winners off the table, and even if you got some losers, count those as carry forward losses at this point. Because if you're down now, maybe let's just say you're down 20%, worst case scenario, you bought at the high point, you're down 23%. I can't sell now. I can't take, no way, I'm going to lose too much money. Great. How would you feel if it was down 60%? Then would you have wished you sold when it was down 23? Because I bet you would. That's your option, folks. So get used to it. Most people watching this do not have the time horizon to weather this storm because you don't understand the drawdown effect. The drawdown effect, if we hit 50%, if your 401k loses 50%, you got to make 100 to get back your 50 you lost. It's called the drawdown effect. It's just mathematics. It's not hard. But I mean, when you look at everything going on here, folks, like I've studied the Great Depression. Shit wasn't this bad. It's a scary thing, Stephen. During the Great Depression, things weren't this bad. Like, this is insane. But yeah, we really want to focus on what's going on with Elon and Twitter. You know what's going on with Elon and Twitter? Elon did a massive favor for all of you. He showed you the corruption, the lies, and how unreal things really are behind the scenes in social media. He showed you that company's valuations is based on its subscribers, based on its users. And Stephen, how many of the users are bots based on the preliminary numbers?
I mean,
too many?
Yeah, nobody knows, and they're saying that's one of the things in the lawsuit is they're bringing in these experts that are claiming it's going to be very difficult to prove the amount of, here, let me just share this real quick here.
I got to hit this one question about I-bonds when we get there.
So yesterday this all came out. Legal battle between Twitter and Elon Musk centers on complex metrics. So Tesla boss questions the company's stated number of spam and fake accounts, but data scientists say such a figure isn't easy to determine. And they both, Twitter sued Elon yesterday to try and make him close on this $44 billion deal, which should be interesting. It's one of the largest lawsuits of this size in corporate history when it comes to a buyout of a company like this. And they've both hired very, very high profile law firms to support each side. So this might get pretty dirty, and it's going to be interesting because now they're going to be forced, because it's going legal into the courts, they're going to be forced to kind of open up those books a little bit more and talk about the data and how they come up with what an account is and stuff like that. And maybe that's what Elon's entire goal was to start with. I mean, it's hard to force somebody to buy a $44 billion company. I mean, how do you pry $44 billion out of someone, right? I mean, one of the theories that's going around right now that Elon was playing a long game from the very beginning, where this gave him a reason to liquidate $8.5 billion of Tesla stock, which he did because he was going to apply that towards some of the funding for this $44 billion deal, his own money from the Tesla stock. And a lot of people thinks he might have done that as a way to get out of Tesla and liquidate and cash out some money from Tesla without sinking Tesla's stock. Because if he was just to go out there and sell Tesla stock because he wanted the money, well, that tanks the company's stock if they see somebody doing that. But if he had a reason to liquidate 8.5 trillion or 8.5 billion to buy Twitter, then that gave him the reason to do it without tanking Tesla. So some people think he did it for the long game, even if he has to pay $1 billion to get out of this contract, which was the original way he could get out of it. Even that would be worth it to him in the long run. So there's a lot of talk. There's a lot of conspiracies, theories on kind of what both sides are thinking in this, because you got to remember, at first Twitter didn't want to sell to him. Elon basically forced them. Then they said, okay. Then Elon says no. Now they're trying to force Elon to buy it. So it's all gone full circle. It's just been a very interesting story, and it's just going to become more and more interesting to follow. So we'll definitely keep updated on this each week and let you guys know what's going on with it.
Yeah. It's interesting. It's definitely, I'm interested in it. I mean, I very rarely ever get interested in news, but like there's two sides to this. I mean, he entered a contract, but in that contract, I would think that he'd have smart attorneys that put in there provisions to make sure that the data was correct. If the data is not correct, he's got an exit. Worst case, if I'm not mistaken, he had $1 billion exit. If he walked away, he had to pay $1 billion. So that would be the worst case scenario. To him, $1 billion, yeah, it would hurt, but not probably too much. I mean, he's the richest man in the world. One thing too, and I want to hit two things. I want to hit I-bonds, which I pulled it up behind me. Okay. And I also want to hit Lawrence. Lawrence is awesome. Lawrence coming in from YouTube today, but he's usually on Facebook. Emails me all the time and we talk. He's been buying a bunch of real estate, doing some smart moves with the rental plays. But he keeps asking me, is there blood in the streets yet? The answer is no, there isn't. People still think things are going to be okay. People still have money. People are still traveling. This is the precursor. This is the 1929 summer. Research it, folks. Look at 1929 and look up, and there's a name for it. I can't think of what it was called, but look up the summer of 1929. And you will see, that's where we're at. There's no blood in the streets. But here's what you are seeing, folks. For all of you real estate investors, you know what you're seeing? Massive, massive cracks in real estate. Because interest rates are going up so high, so fast, and will continue to go up so high, so fast. The cost to buy real estate is forcing real estate prices down across the country. It's going to start with the high-priced stuff. Okay, so high-priced housing is already taking a hit. I'm seeing it firsthand. Now, we flipped a lot of houses. We have a couple we're trying to get rid of. We just got a contract for one last night. But if you're flipping, you better plan either to take a 15 to 20% the decrease in price just for safety. You might get lucky and get out, but you've only got another 6 months, and that's at best case scenario. But there isn't blood in the streets. Real estate's going to get hit. I don't care what you think. I don't care how much demand there is out there. You know what the demand's going to be? For rentals. Because people aren't going to be able to afford houses with the new interest rates. So either house pricing has to come down, which it will, but probably not for another 6 to 8 months, maybe even longer. So the price of real estate won't come down much. And if it does come down a little, please don't think that that's your buying opportunity. It's got a lot more to go. But in 6 to 8 months from now, if the Fed continues on with this plan, which they will, 9.1% inflation, remember what that means. Fed's going to destroy the economy to tame the beast called inflation. They've already said they're going to do it. It's not my words, it's theirs. I just made it more dramatic. So how do you play this game? Well, somebody over here said, Facebook user, and thank you for putting this in, he said, with IBC, which is the infinite banking concept, the phrase dump in takes on a positive meaning. That's right. Dump your stocks and dump into something guaranteed. Maybe that's what he's saying, but that's a great analysis on that.
Yeah, but Kramer says we're going to have a strong rebound in August. So.
Oh, yeah. Kramer's always right. So follow that news. And if you're following Jim Cramer, why are you on here? You must just want to get humored and listen to us talk. Jim Cramer has to be in history one of the worst stock pickers because he gets it wrong more than he gets it right, but yet people still watch him. I think it's because of his buzzers. So I'm going to get a row of buzzers just so people watch me. And then I'm just going to be wrong on everything. So far, we've been right on almost everything. Maybe the timing's been off, but you can't time the markets. But we've warned you all plenty of times with plenty of listen, like any of you that didn't get out of the market, any of you that are suffering in losses right now, like shame on you. I don't mean to say that in a mean way, but shame on you. Like if you follow us and you're around this campfire, What the F, the wealth webinar that we do every Wednesday at 1, we do 7 live shows a week. Do you know that? And there's not one show that we do that we have not been giving the warning signs. Almost like I need one of those flashing lights behind me. Warning, 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 warning. Like we've been doing this for a while, folks. And if you didn't get out, we would have had you out, maybe not at the top, probably a little before the top, but you'd be pretty freaking happy now because you would have made a heck of a lot more money. Now, listen, we don't get paid for giving stock tips. We don't get paid for giving you advice. We do all this for free. So don't think there's some angle we're trying to take where we're trying to like, oh, well, you got to do this and invest with us. We don't invest your money. We won't take your money. Never. Don't give me your money. I won't take it. Like we don't do that. We teach, we educate, and we show you the way how to take back control of your money. That's all we do. The news is right here in front of you. I mean, we didn't hit all of them, but I mean, let's just quickly go through just so you can see kind of what we're talking about. Inflation's 9.1%. US and Euro, USD and the euro are equal. Crypto, we're going to cover in a second. Holy shit, is that a bloodbath? Let's see. Spirit delays the vote on Frontier deal amid concerns around the shareholder support. Legal battle between Twitter and Elon. Sri Lanka imposes state of emergency after the president flees the country. I'd like to get more news on that. Rare violent protests in China. Hey, banking crisis is starting in China. Biden lands in Israel to beg for oil. That's not what the news article says, but you know that's what's true. The Dow futures tumble. It was 200, but now it's more than 300 last I checked. I'm freaking out. I started investing money with a robo-advisor in September, and I've lost money. How am I doing? Should I keep going?
You should listen to that guy, Chris. Come on.
Dude, I can't even.
Let me just show you this article. It makes me laugh.
I'm trying to be nice today. I just can't.
Look at this. Just say it one more time. Let's do, I don't know if you guys saw Biden speak this week, but he's reading something off the teleprompter and it says, repeat the line. And he says, repeat the line and keeps going. It gets worse and worse. But look at this. Let me repeat the line for you, Chris. I am freaking out. I started investing money with a robo-advisor in September. I've lost money. How am I doing? Should I keep going?
Please tell me there is some hope for the youth of this, because that's probably somebody that's younger doing a robo-advisor. Please give me a glimmer of hope that there's some hope for the youth of today, because holy shit, that's just like, how am I doing? Like, should I keep going? Can somebody bail me out? That's the mentality. That's what I'm reading out of
all I have to do is deposit money and let the account do the hard work, which works for me.
Yeah. Oh, and then to wrap it all up in the news, Joe Biden calls Hispanics unique tacos. I mean, that's just a little cherry on the top for you. That's the news for today. That's what the F happened. So how y'all feeling? Somebody here said on TikTok, this is Seashell Hunt. If the dollar crashes, your cash is worth nothing. Property is still worth something. So that's a complete doomsday thing. The dollar isn't going to crash. The dollar is still the reserve currency. It's still what oil is valued in. Now, that might not be the case in the future, but the dollar isn't going to go to zero. And if you think that, dude, then there's still some land and farmland out there that China hasn't bought. Go buy one as far away as you can. Make sure there's running water. Build your concrete bunker. Dig at least, I think, 20 feet down to protect yourself from a nuclear blast, because that is where we're going if that's what's happening. And you know what? I'm not going to live in fear. If a nuclear bomb hits, all I ask is, can I please be in the ocean waiting for that wave? And hopefully the wave comes before the shock. I mean, but hey, listen, guys got to have a goal somewhere. And if it's the end, like, that's all I want to do. And I'd love to have my daughter out there with me.
Chris, we didn't miss one piece of news. So Los Angeles is going back to universal indoor masking in a couple of weeks.
Sweet. Great.
So we got that.
Awesome. Guess I'm not going to California. So if anyone has events in California and want me to speak, if there's mask mandates, I'm not coming.
Wow.
All right. So I-bonds. I didn't hit that, but treasurydirect.com. Just go there. The auction is going to be ending, I think, pretty soon. I-bonds right now are 9.62%. 9.62%. They're guaranteed by the full faith and credit of the government. And unless you're Seashell Hunt, who thinks the U.S. dollar is going to go to zero, which means the U.S. government goes defunct, hey, I guess all things are possible. But unless you don't believe that in the next year, this is a great place to put your money. Okay. Clearly, you all know that I'm not suggesting you buy I-bonds. I'm not making recommendations, but I did. You can only buy $10,000 of them per person, per entity, and per trust. So I went through all my companies and our reserve accounts. We call them our war chest. We bought $10,000 bonds for as many companies as we could. I have 19 of them. I bought one for my wife, one for myself, 10,000 each. You should do the same thing. That's a great way to hedge against inflation. And if you don't want them, when inflation gets tamed by the government, by the Fed's massive action, sell them. You only need to keep them for a year. If you sell them after a year, you give back 3 months of interest. So what is the math? 9.62. If you give back 3 months interest, you make 7.77. It's better than a sharp stick in the eye. Yes. So Ron, I got to give Ron props here. You guys have helped us more than any financial advisor people or financial advice people ever. So I think he's saying we did better than the financial advisors. Thanks, man. We take that as a badge of honor. And, you know, if we were generals in the Navy, we'd have, or Army anywhere, we'd have a whole thing of badges everywhere because we beat the advisors. Well, we're not hunting for commissions and fees. And that's probably why we beat them. We're telling you the truth, not what serves our pocketbook. And then he said, Private Money Club rules. Folks, all of you should check out privatemoneyclub.com. Shameless plug. We are launching a U.S. launch in October 14th. We're going to be doing it from Sundance, Utah. It will be one of the biggest events in my business life. Mark my words. We will be launching Private Money Club. It's been in beta for 2 years. We have about 230, 260 members now and about $20 million in deal flow. So you're probably saying, what is Private Money Club? What is this thing? Why is it so important? Because it's going to change the way money works in the future. Once a lifetime or once a decade for some of you, something happens that changes everything in the future. What is it? It was the telephone. It was electricity. It was the iPhone. Or maybe it was the Mac. But you can decide. All these different things changed life forever. Your life will never be the same after this takes hold, I promise you. Because the way you get money for the things that you buy, this will be your source. We're starting with real estate. Okay. But from there, it's going to probably go to cars. It's going to go to financing for your business. You got this great business idea. You can post it on Private Money Club and other people can come in. And that might be where you find your first round of funding. It might be where you find your partners. Everything will change when we launch. Question is, are you going to be in the beginning or are you going to be the late adopter later? Doesn't matter. But we will change the way money works and the way that people finance everything in their lifetime. October 14th. There are some seats left. If you want to join us for that event, it's going to be epic. If you've ever watched any launch, like an Elon Musk launch of a product or Steve Jobs while he was around launch of a product, it will be that caliber. Just so you know, it's $5,000. I don't know how many seats there are left, maybe 14, 10, something, 12 seats available. That's it. Once it's sold out, it's sold out. It's at Sundance Resort. You're going to go flying in helicopters. You're going to go fly fishing. We're going to do all sorts of cool stuff. But that Friday will be an epic U.S. launch of Private Money Club. And I'm pulling out all the stops. We're not sparing any money. It is going to be an epic, epic event of massive proportions. And you can either be there or you can hear about it later. Let's see. So here's another question, Stephen, I want to hit. Let's see. I can't really read the name. Royal Golf is saving. In savings, it is losing money right now. Okay, this is a good one. So I'm going to hit this real quick. How much time do I got, Stephen?
We're good.
All right. So the question is, if I've got my money, I don't know, I'm just going to use here. Let me do a different color here just to make it so it's more visible for everybody. And if it's backwards for you, just watch. All right, I'm going to talk through it. If I got 10 grand and I got that money in a savings account, what most people are doing right now is freaking out and trying to rush to find a place to put that $10,000 so that they don't lose right now 9.1%. Okay. And what most people have done up to this point before they get around our campfire and we give them alternative strategies, not traditional financial knowledge, is what did they do? They bought risky investments. Okay. What has been one of the biggest risky investments that people have done? Crypto, right there. Crypto. Okay. That's been the biggest one. How's that looking right now? I'm not even going to say. And then what else have they done? They bought stocks, mutual funds, ETFs. So let's just take stocks. And I'm going to get the percentage wrong. How many of you for the next year, maybe 2 years, would be okay losing 9.1% on your money in savings so that you have the money, the dry powder, to take advantage of an opportunity? Now, I bet you just that open-ended question, the answer would be not many. Not many people would be willing to lose 9.1% to inflation, just so you know this is inflation, to keep money in a savings account. But I would. Not that I know better. I keep it in private banking policies where I earn a lot more than this, but I'm just saying I would, because you know what the alternative is? How many of you bought stocks because you were worried about inflation? You can be honest. I bet you it's a lot of you. So most of you are down 23%. Now, let me ask you an open-ended question. Would you rather lose 9.1% and have full liquidity of your money, or would you rather lose 23% and maybe not have liquidity of your money? Because if you're in crypto, you very well might not have liquidity of your money based on what's happening to some of these hedge funds. Which would you prefer? Well, crypto is down way more than that. Let's say crypto is down upward of 60%. Would you rather lose 9.1 or 60? Listen, folks, I'm not trying to be an asshole with this, but like, it's a question. Savings losing money right now. Yes, right now you're losing to inflation, but what's worse? Lose to inflation, or the alternative is put that money in risky assets. If you're going with traditional financial knowledge, how you doing now? Not good. And how are you going to be doing in the future? Way worse. Get around the campfire, folks. We'll teach you how to do it. I mean, I-bonds are one small little tip of the iceberg. Yes, if you only had 10 grand, where would I put it? And if you didn't need access to this in the next year, I would put it in I-bonds. I'll be perfectly honest, because you're going to beat inflation, you're going to be safe, and you're not going to have to worry about it too much. But really what you should be doing is what everybody over here in the chat from YouTube and Facebook is doing, is put your money in the infinite banking concept policies. Now, the infinite banking concept is not a product, it's a process. It's how you move your money. It's the process of taking back the banking function in your life. The product that we use is a very specially designed and engineered whole life insurance policy. Don't you dare say IUL to me, because I will get pissed. It's a whole life. Anybody that's putting money in IULs right now, you need to have your head inspected. Why? You know you're going to lose money. No, I'm not. It's got a floor. Yeah, but there's costs, so it puts you below the floor. What's the upside of an IUL right now? Well, I participate in the index. How the index is doing? They're down over 20%. The NASDAQ's down even more. How the index is doing now? You're zero. You're at the floor, and you're going to maintain that floor for at least probably 2 to 3 years. So you are admitting that you're okay losing money for 2 to 3 years. For what reason? So that the financial advisor, the World Financial Group guru, sold you something to make a commission? Is that really what you're doing this for? Because there is no upside right now in IULs. Oh, well, I'm buying low. I heard this the other day, Stephen. This is hilarious, dude. I asked a question on one of those trainings. I said, why would you buy an IUL when we know the market is headed toward, or the economy is headed toward a recession and the markets are selling off? You know you're going to lose money. Why would you buy an IUL? You know what they said to me?
What?
They said, I'm buying low. Every dollar I put into the IUL, I'm buying low. I freaking was like, oh my God, this is hilarious. This is like the most craziest thing I've ever heard. These people actually think they're buying the index. They actually think they're taking a position with every dollar they put into IULs, and they think they're taking a position in the index. You are not. You are participating. The insurance company is buying the index. You are simply participating. That's all it is. You have no stake in the investments. That's why non-security licensed, non-Series 7, non-Series 6, non-Series 63, 66, all those security licenses, none of those guys selling IULs have security licenses. They shouldn't even be talking about stocks. Well.
They really shouldn't. I mean, that's pretty amazing that that's allowed to happen.
You'll see changes come in that, because what's going to happen is you're going to have a major blow up in this next one of IULs. And when that blow up happens and it becomes mainstream, everybody will strike down, and there'll be regulation, and they'll change them. And hey, IULs won't be what they are today. But everybody that plowed into them, hey, you should send a letter to the advisor and say, hey, I hope you appreciate the big commission you got, because I don't have any money to use. Well, anyway, just saying.
And every time I'm looking at like a new boat or something, I'm elbowing Chris. Hey, man, let's do some IULs. Let's make some money.
Michelle Hunt said something. The income from rented land can invest in more land. Listen, like we want to look at something solid. If you got money, because land you can't finance, but if you've got liquid cash, he's right. Like, buy farmland. Like, hey, China's doing it. Gates is doing it. Like, that's a great thing. And then rent it out to farmers, because you know what we got in this country? We a little bit of a food shortage. So farmland, or any land for that matter, if you can rent it, that's a great play. Listen, I think real estate's the greatest investment on earth, but there's a right and a wrong strategy and a right and a wrong time to buy. I just think right now is a really scary time to buy real estate, unless you can wait it out 10 years, because that's what it's going to take. If you don't need to sell that real estate for 10 years, good game on, man. You know, you should have been buying with the low interest rates, which most of you were. Smart, really smart. Oh my, here we go. Who said that? Mark. Oh, it's Mark. Mark the money multiplier. Mark, why are you using the name of our company and yours? But that's okay, man. That's cool. Mark the money multiplier. Okay, that's an interesting one. Just so you know, the money multiplier is a trademark name. Just telling you. But he said, what are your thoughts on MPI versus IBC? Oh, fuck, man. I don't mean to swear. That's first, Stephen, that's the first time I've sworn this whole session. That's pretty good for me. MPI. Dude.
You're asking about MPI and you have the money multiplier in your name? That's a disgrace,
Curtis
man.
Ray. Get
that off your name right now.
I'm going to make a prediction. Like, I'm just a little guy, but I'm a little scrapper. If I ever see that motherfucker, I'm just going to punch him in the face. Andrew's probably mad that I just said that. But if I ever see Curtis Ray in his little tucked-in polo with his white belt playing MPI, I'm not gonna say anything to him. I'm just gonna punch him in the face. And
That's a joke, guys. That's a joke.
That is not a joke. I'm gonna punch him.
It's a joke. I'm not an attorney, but that's a joke.
Okay. All right. I'm not gonna punch him in the face.
Thank you.
Maybe not. Anyway, that's my thought. I don't know what else to tell you. MPI, why don't you just do some research on that guy? Why don't you do some research on the different people that are filing complaints against him for MPI? MPI, my ass. That is a failed plan. Yeah. And MPI will never work for IBC. MPI is a long-term strategy, like a retirement strategy. And it could potentially work. The way he teaches it is probably flawed, but it could potentially work for long-term. IBC is a today strategy. It's taking back the banking functions in your life today. It's different, just different animals.
You know, Chris, I just saw an article pop up that Reuters just put out about the euro and the dollar.
Yeah.
I just wanted to show one thing on it because I found this kind of interesting. Look at this real quick while you're looking at the comments.
All right.
So it's just talking about an explainer why the euros fall below parity versus the dollar matters. And, you know, basically saying it's just very rare. It actually fell this morning below the dollar, which happens barely ever. So it's very rare since the euro's birth in 1999, the single currency has spent very little time below parity. But right here, everything's weak versus the dollar. So you hear like some of the people like, well, what happens when the dollar collapses? Yeah. What happens when, but you got to remember, like, the world is having a hard economic time right now. It's a global, you know, a lot of people are saying a possible global recession is coming and things like that, right? So, you know, it goes back to that old saying that we've been saying now for a while. It's still the nicest home in a shitty neighborhood. Like, the dollar is still the reserve currency of the world, still where the money's going. I mean, and this just proves that right there. So that whole doomsday thing about the dollar collapsing and everything, I just don't get that far into it, Chris.
Yeah, I mean, listen, I understand why people are saying that. You know, there's a lot of people that have lost faith in the U.S. government and lost faith that the democracy still exists. And I agree. Like, to me, I think democracy is dead because they found a way to buy votes. But, you know, there's still an election coming up. So we're going to see if there is still some glimmer of hope in democracy. But I will say this, and I will say this the day I die. The United States of America is the land of opportunity, the land of the free. And the United States of America is the greatest country on earth. Make no two ways about it. So if you don't have faith that the United States of America is the greatest country on earth, go somewhere else. Why don't you move to Ukraine, see how that's going? They're fighting for their freedom over there. Why don't you see what that's like? Because too many people have died to make this country the greatest country on earth, and it's going to stay that way. So if you lose faith in the dollar, you're losing faith in the U.S. government. I mean, that's all I have to say about that. Let's hit a couple of gold. Stephen, you want to hit on gold? What are your thoughts on gold?
Yeah, that's a good question. I mean, you know, it kind of boils down to kind of manipulation. You know, I mean, the markets are so manipulated right now that everything the Fed is doing, you know, if we lived in a true free market, if we didn't have all the manipulation from the global central banks and the Fed, and, you know, gold would run right now. I mean, because it's the safe haven. But with everything going on, I mean, it kind of keeps it, you know, right there. I do think that gold is a good place to store some wealth right now. I mean, if you look at an overall portfolio, my opinion would be around 10 to 20% in gold and silvers and precious metals. I think you think a little bit less than that, Chris, but I think it's a good part of an overall portfolio. Absolutely.
Yeah, I agree. A couple of people chiming in here. I'm going to hit Lisa Manconi. She's been around our campfire. We love Lisa. She said, are I bonds the same as TLT? No, they're not. Totally different. TLT would invest in 10 and 30 year. It's an average duration of 25 or 20 plus years. for TLT. So you're buying treasury bonds. It's still a safe play today. I bonds are different. They're inflation protected securities. So to answer that one, Thomas the Turtle, we love Thomas coming in. He bought intermediate bonds and they lost 7% over 9 months, including fees. Took that money out, put it into IBC policies. Late Night Dad, love that one. That's a great name. Coming in from YouTube, said, how do we remove money I have in a 40 or 457 and a 401 to get it into my policy without getting taxed? You don't. Unfortunately, when you cross the line from qualified to non-qualified money, you're going to trigger taxes. And if you're not 59 and a half, you're going to trigger early penalty fees, which are 10%. So there's really no good, easy answer for that other than it's very difficult to get money over into the IBC policies from retirement accounts. Your better bet would be to look at self-directed IRAs as a means of taking back control and then basically invest in things you know, like, and understand. That'd be my best advice for you. Lynn, no, we're not just talking about IULs. It was just brought up. Thomas the Turtle, the team example, my application specialist was in Florida. Just kind of talking. Mike, let's see, what did Mike say here? Do you recommend putting money in IBC first, then taking out a policy loan to purchase I bonds? Mike, that's a good question. If you were looking at I bonds right now and you're like, oh, I want to put the money into a policy and then take it out to buy I bonds, you probably miss the I bond auction. So just go direct to I bonds. If you already have money in an IBC policy and you don't have somewhere for that money to go work for you, then I bonds would be a great choice to do that. But don't wait to get a new policy then to fund I bonds, because it's an auction and it will end. And you won't be able to get them. Well, you'll be able to get them in the secondary market, but it's not going to be as good as the primary. So that would be the way I'd answer that. Here we go. Oh, Thomas the Turtle doing some work from the web. MPI, maximum premium indexing, secure compound interest account is an index universal life policy with sexy advertising. There you go. Thanks, Thomas. What other ones? We got anything else? Son is 21. Should he do a 401k, a 457? So Taste of Idaho might be coming in a little bit late. If your son is 21, the thing that your son should not do is a 401k, a 457 or anything. So you got it right, but it should be do not do this, son. You're 21. Your son is young, has his whole life in front of him. He should keep control of his money. Put it somewhere where he controls it. I'm not going to just say, the infinite banking concept would be a great process to teach him, but if he learned what the infinite banking process was and he applied it in his life, he would not be falling prey to what we all have, which is the big lie, and using banks for everything that we need and allowing banks to use our money to then go out and make 400 to 1,300%. So the biggest thing you could probably teach your son, Taste of Idaho, is banking. Teach your son how to take back the banking functions in his life, because that will be the single greatest thing. And also teach your son the 6 laws of wealth. Let's see what else we got. I'm running out of questions here.
Well, one thing, Chris, we didn't hit on yet was the housing market. We talked a little bit of it before the show. You're starting to see a drop in some stuff. I just did a quick search on the housing market just to kind of see what the news headlines are to get a feel for it. And a lot of it talking about it cooling, home buyers are retaking the upper hand. Our home buyers taking back control, which all signifies. And if you scroll down just a little bit, things are cooling. These are the overheated markets. You see from Yahoo, rising interest rates are crushing the U.S. housing market and blaming it on rising interest rates. And then we look over to what's going on this morning with the inflation at 9.1. And the next meeting, I believe, is July 21st. The Fed is going to have to announce their next rate hike. Well, with this latest inflation data, could we see another 3/4 point? Could we see a point? Are they going to stay conservative at a 0.5 point? But those rates keep rising. These interest rates keep going up. It's going to continue to affect these top level headlines as well. So I don't see housing necessarily, I can see things continuing to kind of come down. What do you see, Chris?
Well, I've been talking about it for a while, and there's no secret. Me and my wife, for the last couple of years, have been selling off our rental portfolio with lots of people saying we're crazy and stupid for doing that, because we had about 91 doors, and we just did the math last night. Me and my wife were sitting there because we got that offer on that house, and we were saying, how many are we going to have left if we sell off all the ones we want to sell? Outside some private mortgages that we hold on some properties we own, we would be down to 7 properties, and that would be it. So 91 down to 7. I mean, that sounds crazy. Why would you ever do that? Well, it's because I know something that most don't. And I understand that this next opportunity that's coming, that will come, might take 2 years, will be greatest opportunity of our lifetime. So we'll probably start buying, but it won't be for at least a year or two. All we're going to do is use Private Money Club, keep our money in motion, keep running the money through our banking policies, which is the infinite banking concept, and moving it back out through Private Money Club and loan on short-term, first secured positions on deals that I underwrite and that I like, because that's what I've gotten good at and that's what I understand. What is the United States housing market saying here?
This is decent. This is interesting data. Home prices nationwide were up 11.2% year over year in June. At the same time, the numbers of homes sold fell 17%, and the number of homes for sale that are listed rose 1.6%. So we see demand dropping and supply rising at the same time, which means a cooling housing market.
Absolutely. And folks, if you really want to learn more about some of this stuff that we're talking about with private lending, I mean, there's a couple ways. You can get my book for free, Private Money Guide. Teaches you all about private lending and how to do it the right way. That's on my website, chrisnaugle.com, or just join us this afternoon. Me and Stephen are going to have a great show. We do a wealth webinar show every single week at 1 p.m. Eastern time, and we're going to be talking about private lending. We're going to be talking about what we're doing, what we're seeing in the markets, in the economy, which you heard a big thing, but we're going to really talk about how we're moving our money, keeping our money growing very conservatively, but how we're doing it using private lending as the main tool, literally just becoming the bank is what we keep saying. And, for those of you that are asking about, the infinite banking concept and how do I learn more, it's super easy. Stephen does a live show every Tuesday night. He just did it last night at 6 p.m. Eastern time, where he basically goes through the whole thing. My YouTube channel has it. You can go to chrisnaugle.com and a little video will pop up. Don't close the video. That's the video that teaches you what the infinite banking concept is. And then after you watch that, book a call with us and we'll answer any questions you have. Just a few more questions because we do have to do a quick lightning round on crypto. And my cat is right in your guys' face. Expo4560 said, let me ask you, I'm 50 years old. What could be the best rate if I want to retire in 5 years with 15 million a month? 15 million a month? Okay, well, that's a little bit more loaded question. So I'd need way more information to understand that. You're asking me to do math in my head that I'd need calculators to do, and you're asking me for an answer I can't really give you if I'm reading it right. What could be the best rate if I want to retire in 5 years with $15 million a month? $15 million a month? Well, I hope you probably have about, 100 million? Wouldn't that what you'd need about? No, you need more than that.
More than that.
Well, hey, if you got that much cash, we should definitely talk. That's all I'll say to that one.
Yeah, call me.
Book a call. Don't worry about watching the video. We'll get into that. Quentin Lewis coming in from YouTube said, what do you think about taking money out of houses that appreciated by 30%? It's got another loaded question. I think really if you're going to take money out, like your second part of your question, you definitely should take it out in the form of a HELOC. I don't think refinances right now make any bloody sense. The banks will say they do because they make big fees, but a HELOC, you can get certain HELOCs that will still give you 90% loan to value. So Quentin, if you don't have a HELOC on a house that's up 30%, you need to get your butt in gear and go get that HELOC because you definitely want access to that capital because as what Stephen just read, it probably won't be there in a year. So giddy up and go get yourself a HELOC. I mean, because a HELOC costs you nothing if you don't use it, but it still gives you the dry powder and the cash to use and deploy it when that comes. All right, Stephen, we're going to do a lightning round on crypto. I saved this for the end because I wanted only the ones that were here to get this. So, yes, Skibo, it is free. Yes, it is free. Oh, 15,000 per month. Okay, so that's a more legitimate question. Again, there's a lot more we'd need to answer that question. I don't know how much money you'd need without like sitting down and finding more about it. But Stephen, kick this off from Bloomberg about crypto and what's going on here.
Yeah, I mean, so this is a really good article. It gets into very, 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 very good detail about the crypto markets, how this large hedge fund run by these two guys named Three Arrows Capital, how Sue and Kyle turned Three Arrows Capital into the most important hedge fund in crypto, but they bet everything on prices only going up. And maybe I'll do a special show just on the details of this article because it's important to kind of get into the crypto mindset and what a lot of investors think when it comes to crypto, how these guys kind of led the way and brought a lot of other large companies and Wall Street Wall Street banks into their overall scheme, how they were lending and borrowing simultaneously, how they basically were creating this market. But the entire market, Chris, was based on this right here, betting that everything would only go up. And why it's so relevant is how many times have you and I heard that over the last 2 years? Just buy crypto. Well, why? Well, because it's going up. You don't want to miss out on it. And that mindset gets in there. And now that that's kind of broken, and we see, hey, things don't always go up. And when you over leverage in such a way that this has, and you don't have the Fed or the central banks that are backing you up, how quickly it can all go away. I mean, these two guys in the matter of months went from meeting with people in Dubai to open up new businesses and borrow hundreds of billions of dollars to continue growing this thing. In a matter of months, they went bankrupt, and now they're both missing. Like they disappeared. The authorities
no, they didn't disappear, dude. You'll see them floating face down on some river somewhere.
Or we'll never see them again because they took billions of dollars and disappeared. I mean, we'll see, billions of dollars can get too far away in the black market. But so we'll see where this story goes. And I'd have to spend probably a good 30 minutes to an hour kind of breaking this down, which maybe I'll do this week one day and put out a special episode on it. But if not, definitely go check out this article by Bloomberg that was put out. Yesterday? It's very, very good.
It's interesting because I feel like it was just yesterday, but a few short months ago, not even, the only comments we would get on TikTok were, people that were crypto. Oh, do this. Oh, do that. Do this. Those people are gone. Like a lot of those hedge funds that they were suggesting, a lot of those shit coins they were suggesting, they're gone. They've gone to zero. There's zero liquidity. Like that big one, and I knew about this one that they just announced. The name eludes me right now.
Luna, Terra, you'll see Luna,
but there's Terra, but there's another one. It was whatever. But they went bankrupt. Money's frozen. Like I know one guy who's got $400,000 frozen. They were doing staking, is what they were doing. Like that was supposed to be, and the word guaranteed is a very, it's a delicate word that you should only use when it truly is guaranteed. And the word in crypto was staking and everything else. The word guaranteed was thrown around a lot. You watch and see how many lawsuits come about because of the inappropriate verbiage used and the inappropriate suggestions and recommendations that were given from some of these big, crypto firms that are now defunct and gone or will be in the short term. Like Warren Buffett said it best. I hate to say it, but what crypto is today is what the .com, boom was back in the 90s and the early 2000s. And we all know what happened. The .com crash happened and it thinned the herd. It almost took out companies like Amazon. I mean, look at Amazon. Imagine if Amazon wasn't around today. Well, .com crash almost took them out. Well, the same thing's happening in crypto, but crypto isn't dead. Crypto's not going away, but it's going to thin the herd in a big way. So the ones left, maybe Ethereum and Bitcoin are the only two that I ever even invest my money in. Those two will probably make it through, but they're going to be beat up bad. They're going to go through a very severe fight to stay alive. And, then it'll provide a really good opportunity, but now might not be the time. Now I have a hard time, Stephen, really thinking of now being the right time to invest in much of anything outside of secured assets that like and understand, or in very short-term loans like what we do on things that we trust with people we trust. I like lending to people that don't need money.
No, absolutely. And that crypto thing, goes back to what you always talk about with the laws of wealth. And, a lot of the staking that was going on was, these companies were offering 20%, 15%. And in a world where treasuries are at 2% and savings accounts are at 0%, that really attracted people. And they, like you said, used words like guaranteed, it's staked to the stable coin and all that stuff. And it was all lies, but it goes back to the laws of wealth. When you chase unrealistic gains and you do business with things you don't fully understand, your money will flee you. And that's exactly what's happened to all of these people. Unfortunately, it's the same story in history over and over and over and over again. And we don't seem to learn the lessons. But you and I, Chris, will just keep trying to get the word out there. Because I know the people that followed us the last 2 years, I know a lot of them avoided a lot of these money traps that we're seeing right now.
Absolutely. So, folks, we hope we've been able to help you. We hope this was valuable. Sorry about what I said about Mr. Curtis. We'll see what happens when we actually do meet. But with that being said, really just be safe right now. Like there is no gain left right now. Stop chasing unrealistic gains. It's the fourth law of wealth. And if you violate that, your money's going to flee you. And that's going to happen to many people. This is the time to preserve and protect. This is the time to get ready for what's next. And what's next is going to be hard for the majority of the people because they're not on here. You all are the 5%. So if you want to join us this afternoon for the wealth webinar at 1 p.m. Eastern, you're going to register at chrisnaugle.com. Just go to my website, chrisnaugle.com. You can see it right at the bottom. Okay, it's Naugle. And just scroll down and it'll pop right there. There's a wealth webinar. You get a free booklet for it. There's no cost. Register. Even if you can't make it at 1, you'll get the recording. This is going to be a really good one. We haven't done a webinar like this on private lending in a very long time. So we're literally going back to the book, and we're going to basically teach you how to be the bank through lending, just like the banks do, but how to do it way safer than a bank and how to do it with your own bank so that you get paid twice instead of once. That's going to be today's webinar. So make sure you register, chrisnaugle.com. And if any of you are interested, we also have the Ask Me Anything happy hour. Come have a cocktail with us and we'll answer all your questions that we didn't get to today. That's at 4:30 today. We stream just like this on StreamYard. So all channels except for TikTok and Instagram. Folks, I hope you guys enjoyed this. Stephen, this was a good one. Thank you for putting the material together. And we will see you all at 1 o'clock. Till then, enjoy your day.
Thank you.